Hello, everybody. Welcome to JAIIB CAIIB English Medium channel. I hope that all of you are doing fine and you are revising whatever you are learning on daily basis. Today, in this particular session of Hero to Superhero series, we will be talking about the IE and IFS subject. And under this subject, we will be learning some concepts using the questions. So we will try to solve the questions based on certain concepts. If you know already those concepts, you can directly solve the questions. If not, then try to go with the flow of this video and you will learn something new today in this particular session. So let's start our discussion with the first question, which is based on the process of globalization. So dash is the stage of globalization which involves cutting edge new technologies like AI, that is artificial intelligence, that powers forward with the explosion of information technology. So the question asks you to tell that whether the AI or for that matter IT enabled services are being utilized in globalization 3.0, 2.0 or 4.0. Right now, when we talk about the process of globalization, what should be there in your mind whenever you see this term globalization? Only one thing or one phrase which you must remember is that integration of economies. Fine, integration of the world economies. Okay, of world economies. That is what is the basic meaning of your globalization. Okay, so under which stage do you think that AI enabled services or for that matter IT enabled services are getting a boom? So the correct answer for this question will be globalization 4.0. And when I talk about the explanation of this particular question, see, simply stated, you must remember one or two things out of this entire table. This infographic tells us that from where the globalization process started. So it started way back in 15th, 18th century. And right now, when we talk about today's era, that is 2024-25, we are sitting in the globalization 4.0. So the age of discovery started off with 15th to 18th century. Then globalization 1.0 was there, started off in 19th century, 1914. Then globalization 2.0. Here we will see some repercussions from the World War also. Then after that, 3.0 happened between 1989 till 2008. So what we have to remember from these particular timestamps, most important thing is the enabling innovations. How we can say that the globalization process has been reoccurring because of the latest innovation. So it started off with basic compass, fine, the compass which we use for navigation. Today, though, we use the GPS system for that. Then the railway infrastructure, ships and ports were established. After that, in 2.0 globalization, we saw the emergence of airplanes. Then in 3.0, the computer systems were there, internet was established, it was founded. Right now, when we talk about 4.0, we have the digital goods and services as the flag bearer of our globalization process. And it starts off with the cloud computing as well as your artificial intelligence. So these are some things which we have to remember. Now, next question talks about the process which is given in this particular statement, the process of reducing the trade dependency and integration amongst the particular units throughout the world is known as dash. So just now I have told you that globalization refers to what? It refers to the integration of the world economies. But here the process of reducing this integration is asked. So what is the process? Whether it is the process of protectionism, deglobalization, tariff barrier, or any of the above. Correct answer to this question will be definitely the reversal of globalization, that is deglobalization. So B will be the right answer here. So always remember, whenever we are talking about the disintegration of economies, then you will have the correct answer as deglobalization. Then what about protectionism? Simply stated, when we back the process of deglobalization with certain law in our country, then it is known as protectionism. And we conduct the mechanism of protectionism based on some protectionist measures. And these measures are various types of measures are there. Like we have the tariff barriers, we have the non-tariff barriers, we have the import quotas. All these are what? These are the components of protectionist measures, the major three protectionist measures. Okay, so although when we talk about such type of options, we think that all of them are same, but a very thin line is drawn between the for the difference between these three terms. And in the exam conducted by IIBF, whether it is for JIIB, CIIB or certification courses, you always have to select the most appropriate, right? Most appropriate options which are given. Four options out of that, most appropriate answer you have to select in any kind of exam which is conducted by IIBF. Most of the cases you will find that this type of phrase will be mentioned after the question here, that select the most appropriate answer from the following. But if it is not mentioned, then also by default you have to consider this particular direction. So, for the explanation part, the globalization in reverse gear is known as your deglobalization and protectionism. So, deglobalization, as I have just told you, the process of reducing the dependency and integration amongst the particular units throughout the world is called as deglobalization. And when I talk about backing this process of deglobalization with the particular law in your country, enacting some law in your country, then it is the protectionism. Okay. So when a government enacts laws that restrict or prohibit the international trade, it is participating in the protectionism. Protectionist measures frequently attempt to protect home producers and workers from foreign competition, and that is why you will find that Indian government is also facing certain criticism based on the concept of Make in India. In Make in India, what happened? You must be knowing that the manufacturing hub, we wanted to become the manufacturing hub of the entire world, but again, thanks to the recent tariff barriers imposed by the USA, we are unable to achieve that status. Next question: which organization popularized the globalization concept in mid 1980s? So there are four organizations mentioned here. You have to tell me that which organization helped to resurrect the concept of globalization. So as you know that here we have seen there were various eras of globalization in which globalization 2.0 was marred by World War. World War One, World War Two, then Great Depression was also there. So somewhere down the line in the 1940s, 50s, 60s, and 70s, the process of globalization took a backstage. But one organization was there which resurrected this concept of globalization in 1980s, late 1980s, and that was OECD. Right? Option B will be the right answer. So as you know, that Organization for Economic Cooperation and the Development popularized the term yet again in mid 1980s. And why it was facing the concept of globalization was facing some trouble there. So the concept, although is an ancient one, but World War One, Great Depression, World War Two forced a retreat from globalization, and several trade obstacles were also raised. This concept of globalization, it was having certain repercussion for various countries, and in India you will find that it was formally introduced via the new economic policy, which is commonly known as the LPG reforms in 1991-92, wherein L stands for liberalization, P for privatization, and G stands for your globalization. Next is the question from your economic reforms, a very important chapter. Just after you complete the globalization chapter, you will find the unit of economic reforms. And here the question is based on the RBI's intervention in the asset of the banks. The RBI's dash cover a range of regulation, including the asset classification, provisioning against the NPA, non-performing asset. These assets are what? Assets are in the form of the loans or advances provided by the banks. So for that, what kind of rules, regulations have been stipulated by the RBI upon the banks? Whether it is known as the capital adequacy norm, ombudsman scheme, IRAC norms, or prudential norms. So one by one, let's see each of them. When we talk about the capital adequacy norms, these norms are for establishing a buffer, right? You need to establish a buffer in your economic system so that in future, if there is some economic meltdown, then we would be able to utilize this buffer to resurrect our economy. So how much capital you have right now? How much capital you have accumulated in a longer period of time? That is known as capital adequacy norm. Whether it is adequate to run the economy during the economic slowdown or not. Then ombudsman scheme. This is a scheme of RBI, right now known as RBI Ombudsman Scheme. That is your Reserve Bank of India Integrated Ombudsman Scheme of 2021, which is basically to address the complaints of the customers. That is the keyword which you have to remember. IREC norms talk about the income recognition as well as asset classification. Now, most of you must be thinking that here it is written asset classification. So this will be the correct answer. But mind it, as I have already told you, that most appropriate answer you have to select. And the particular norms which cover not only the asset classification, but the provisioning norms as well as the regulations. That is known as your prudential norms. So the correct answer will be option D. Okay, D is the right answer here. Next in line is the question based on the committee. And the most important committee of all is Narsimham Committee 2 for the Indian banking sector. So, which of the following market reforms were an outcome of Narsimham Committee 2 for Indian banking sector? That you have to tell me in the comment section. So, what is the right answer here? Quickly try to solve the question. Give me the right answer. A very simple question, I would say, not a difficult one. But again, if you are a fresher, then you might find some difficulty in eliminating certain options. So the first statement states deregulation of branch licensing, whether it was done or not. Then we have prudential norms and disclosure requirements, capital adequacy. So for the Narsimham Committee 1, we had various reforms. And in order to review those reforms, in order to review the efficacy of those reforms, Narsimham Committee 2 was formed. And it actually the outcome of this committee was deregulation of branch licensing, because earlier, even for opening up a new branch, you have to obtain license. That was deregularized after the recommendation of Narasimham Committee 2. Prudential norms and disclosure requirements, again it was done, or you can say implemented fully under the recommendation of Narasimham Committee 2. Then we have the capital adequacy, whether the capital which we are utilizing in our particular banking setup, it is adequate or not in order to compensate for the economic distress in future. So whether you have the uh, required buffer to address the economic distress or not. So all these three were an outcome, or you can say the reforms of the Nasimam Committee 2 recommendation. So D will be the right answer here. When I talk about the second phase of reforms, Narsimham Committee 2, it includes the prudential norms, which we have discussed in the previous question, which states that the RBI's prudential norms cover range of regulations, including the capital adequacy, asset classification, provisioning against the NPA. Then capital adequacy is what? It is a buffer to absorb the losses during times of financial stress. RBI also requires banks to maintain a minimum CRAR, that is capital to risk weighted asset ratio, to ensure they have enough capital to absorb these losses. So in order to absorb the losses, you must have a particular buffer, and it is being calculated using the CRAR. What is CRAR? Basically, we have certain weights assigned to the uh, weights assigned to the assets which are being utilized by the banks to circulate as a particular advance or loan. So these weights will be based on the risk involved in lending, and that is what is being given in the form of ratio along with the capital, the overall capital of a bank. Then the main focus of the reforms suggested by Narsimham Committee 2 was NPA, then capital adequacy, which we have just seen, and lastly the diversification of operation. Now, see, when we talk about the banking system, you must know that from where we have to start our operation. All those operations, which are the basic ones, deposits, lending, that is okay, that is ongoing. But if a particular segment of society they require some more attention, like some local areas there, we need specialized banks, we need to diversify our operation, then we have the local area banks with us. We have some small finance banks also and payment bank also for limited type of operation which is required by the customers. So all these specialized banks, you can say differentiated banks, you can say, were an outcome of the recommendation of Narsimham Committee 2, which states the diversification of operation must be there. Next question is again based on a committee, and when we talk about the committees, you will find the mention in module A as well as in module C. So whatever committee's name you are learning in module A, elaborate discussion will happen in module C. So integrating both the chapters of module A as well as module C will reap the maximum benefit for us. So today we will be learning the six committees, fine, the most important committees which are there present in the module A. So the Committee on Weak Banks 1998 was formed under the chairmanship of Dash, who chaired this particular committee, whether it was R.H. Khan, S.N. Verma, A.K. Khandelwal, or none of the above. So always remember, Committee on Weak Banks was under the chairmanship of S.N. Verma. So B is the right answer, commonly known as Verma Committee. And today in this lecture, as I just told you, six committees you have to remember. These are these six committees, starting off with Chakravarti Committee. It is for the monetary policy. So Chakravarti Committee on Monetary Policy 1985. Narsimham Committee 1, Narsimham Committee 2. One was for financial sector reforms. Two was for review of the banking sector reform. One was formed in 91. Two was formed in 97. Then we have Padmanabhan Committee to review the bank supervision 1996, and it is a very important committee. Based on this only, we have one specialized department also in RBI, that is the Department of Banking Supervision. Then Verma Committee, SN Verma Committee on Weak Banks 1998, RH Khan Committee on Harmonization of Role of FI and Banks 1998. So this particular in this particular session, you must remember the six committees, their chairman and the name of the committee for which they were formed. Next, we have a question based on the Camel's initiative. Which among the following is not a correct match for the Camel's initiative implemented as per the recommendation of again Narsimham Committee 2? So you have to tell me what does C stands for, A stands for, M, E, L, and S stands for. So C stands for capital adequacy, that is correct. A for asset quality, that is again correct. M stands for management. Okay, it stands for management. And L stands for liquidity. So you have to select the incorrect option. It will be incorrect description. Okay, so incorrect description of M will be money, and the correct description will be management. So C will be the right answer. So C, A, M, and L we have seen. What about E and S? If anybody can tell me in the comment section. E stands for your earning, and S stands for sensitivity. Okay, S stands for sensitivity to risk. Sensitivity to risk. Fine. So this also you have to remember the six words which you have to remember for the Camel's initiative. Last question, which among the following were not one of the reforms taken up by the government after 1991? So as you know that economic reforms included strengthening the supervisory system, the banking sector reforms were there, financial sector reforms were also there. So all the three were there. You have to select not one of them. So D will be the right answer. Simple question. The statement might be tricky, but the solution is very, very simple. So D is the right answer here. Okay. Now, a quick heads up for all of you who are wondering that why economic crisis happened in our country for the era, right? 1970s till 1990 also we had economic crisis. What was the reason? The three prominent reasons. First of all, higher fiscal deficit. Expenditure of the government was way above than the revenue earned. Then the second reason was adverse balance of payment, where imports were huge, exports were really less. Inflation rates were also high. You can see for yourself in 1990s, you will find 11.3% as the inflation rate. Right now, we are sitting at what? A comfortable zone, 2.07 only. So these three major reasons caused the economic crisis in our country. Okay, so this was it for today's session. If you want the PDF of this particular session, you can directly scan this QR and you will be redirected to the virtual library from where you can download the PDF instantly. And if some of you who have not enrolled in our courses still wondering which is the most important and relevant course, you can directly contact us on this number 0981 9819247, and our team of experts will guide you through the process of selecting the best course for your JAB November 2025 preparation. Okay. Still, if you have any kind of doubt, feel free to ask me in the comments